What's up guys, welcome back to DCA. So what we're gonna do in today's video is take a look at this price analysis model that I've created for Chainlink. Now, I know I talked about this model probably 6 months ago at this point. At the time, the price was sitting right at around $6. Don't worry guys, even though it took me this long to finally get this video out, the price is still right around $6. Now, one of the things that's been consuming a lot of my time is this website here, polaritydigital.io. So this is a website that we've been working on in collaboration with the guys over at Upside Down Data. If you haven't checked out their YouTube channel, I suggest you head over there. They do some of the best analysis in the cryptocurrency market. I'll leave a link to their channel in the description below. But we've been working on this site here, polaritydigital.io. And this offers a wide range of risk metrics for numerous different assets, including Chainlink. And we have a workbench feature. We're looking at one of the Chainlink risk models that we have here. So there's a wide range of tools available on this site. Anyone ranging from a long-term to a short-term investor or swing traders, you can probably find a tool that you may be able to incorporate into your own investment philosophy. I'm going to be releasing the model that I'm going to show you today onto the website at some point next week. Now, we'll be going live on Tuesday. This site has been in beta test stage, almost a half a year now. We've been working out a lot of the different bugs that we found. And in fact, if you go onto the site right now, the polaritydigital.io site, you'll still find a lot of those bugs because we've been developing the site on a private server. So you won't be able to get access to the full site until Tuesday. When we launch the site on Tuesday, we're going to charge $10 per month. And if you lock in at that $10 per month rate on the first day that we launch, you'll be locked in at that rate forever. But after the first day, that price is going to go up and we're never going to come back down to $10. Okay, so now we're going to talk about this price analysis model. Now, one of the things that kept me from making this video sooner was, well, it was a few things. One of the primary things was, we've done a statistical analysis here and I want to talk about it with you, but I also want to try and avoid, going into all of the different techniques that were used, how this formula is derived. So I want to talk about the model, but I want to try and do it in a way such that, we're not diving into the depths of the math behind the statistical analysis. But I still want to try to put the video out there and really try and have people understand exactly what it is we're looking at. So first of all, I need to clarify what it is and what it isn't. So let's start with what it isn't. This is not a price prediction model. So we do have a model which attempts to identify what is the probability of the price having upside potential 6 months into the future. It's actually a very interesting model. If you haven't checked it out, that will be available on the polaritydigital.io site. And we do have that for Chainlink. And in fact, I think that would be a great model to make a video about next. So this model that we've created, it is attempting to identify these factors that influence the price of Chainlink. Well, if you think back to the prior video we made, what did we say influences the price of Chainlink? So one of the factors truly driving the price of Chainlink, for instance, we said was the total value locked in the cryptocurrency market. At the time, when we were talking about this, we identified some other factors, but I'll just give you this example here to kind of illustrate how a model like this works. So what we're doing is looking at various different factors which we believe drive the price for Chainlink, okay? So for instance, we've looked at the total value locked, right? And you can see when total value locked, all right, so come back to 2018. The price of Chainlink, there was a period where it was up, it was down, but it was kind of overall in a sideways movement. But once total value locked started to explode, that's when we saw Chainlink really take off, because ultimately, when we think about what the actual use case is for Chainlink, and this is something I always come back to, even if you go back to the very first Chainlink video I made, in that video, we talked about a theoretical price model for Chainlink and what was the number one driving factor that was to propel Chainlink forward into the future. And at the end of the day, it's the DeFi market, right? Now, you may say things about CCIP, etc. Guys, I don't care about CCIP. It doesn't exist yet, right? Until it exists, until it does something, until it adds value to the Chainlink network, it's a speculative component of the price and nothing more, right? So what we're doing here is modeling measurable factors that we can use in order to identify where the appropriate price for Chainlink is. And when I say the appropriate price, I don't mean to say that, Chainlink isn't already worth $100 billion instead of the $3 billion that it's currently valued at. What I mean by appropriate price is we can study and analyze the demand structure for Chainlink in order to understand what is actually driving the demand, okay? What is driving the demand and how do changes in those factors actually influence the current price of Chainlink? Further than that, how can we look at these various factors that we can identify as influencing the price of Chainlink, and how can we look to see if Chainlink is at any given point overvalued or undervalued? And so that's what a model like this does. And I think, while we all believe in the future of Chainlink, we hope for the future of DeFi, and we hope for the future of CCIP, we have to look at what the demand structure is for Chainlink right now, because we don't live in the future. We don't know what CCIP is going to accomplish. We don't know what regulatory pressure is going to come down on the DeFi market and negatively influence the price or positively influence the price of Chainlink, right? Of the Link token. So we have to analyze this market based on the reality that we live in right now. And we can do that, fortunately. And so that's what we've done in this video. We have taken these factors, these various factors, such as total value locked. And, like I said, you can see that as total value locked increases, there tends to be a strong upward price movement in the Link token value. When the total value locked declines, we see a strong negative impact on the price of Chainlink, right? Of the Link token. And that's totally to be expected based on what we know drives the demand for the Link token, because it's not the retail market. We've discussed this a million times. And if you're just hearing that for the first time, I'll leave links to the videos I've made in the past in the description below. What is driving the demand for the Link token is the need for data services. If the DeFi market gets blown up, goes to zero, well, guess what? Based on the current state of Chainlink, that would be an overall bad thing. I think everyone's well aware of that. I don't think that's FUD. I think, everyone completely understands that fact. Now, again, let's touch on CCIP. We don't know what that is actually going to do. We don't know how it's actually going to increase the demand for Chainlink, if it even will increase the demand for Chainlink, right? So until such time that CCIP is out driving demand for Chainlink, we can't model that because we don't know what exactly, what influences that's going to have on the demand structure for Chainlink. So what we're doing here in this model, all right, so I'm going to just remove total value locked. So now I'm going to add in the model, and I just, I really want people to understand what exactly it is we're looking at. Here's the model. You'll notice it's this simple red or green line. We've taken all these factors. We've taken total value locked. We've taken the movement in the equities market. We've taken things like the number of active addresses participating in the Chainlink network. We've taken all of these things. I'm trying to simplify a statistical approach to this analysis without actually kind of diving into any of the math. But we've taken all of these factors and said, okay, how much does this thing affect the demand for Chainlink? How much does this thing affect it? How much does this thing affect it? And we can look at all of these different factors, all right? And based on the changes, the daily changes, or, weekly changes, whatever it may be, we can look at how all of these different things influence the demand for Chainlink, but all together. So for instance, the stock market may go up 10% tomorrow, but the DeFi market may become outlawed and go to zero. Well, we can look at how that would be expected to impact the price of Chainlink. Or conversely, the stock market could drop 50% as, the world loses confidence in the US economy and instead switches to a system based completely on decentralized finance. How would that impact the price of Chainlink? And so we can actually look at this data that we have here, and we can come up with a model which shows us that. Just to sum it all up, what we're doing is looking at factors X, Y, and Z, A, B, and C, and saying, hey, how do factors A, B, and C change the expected demand for Chainlink? And with that limited information, we can then say, well, now tell us about the future. When the stock market crashes in 2022 because the Fed is raising interest rates, hey, model, what do you think is going to happen to the price of Chainlink? And that's what we'll get into now. With that said, let's take a look at what this is showing us now then. And let's quickly talk about some caveats. So one of the big caveats I would say is the model cannot predict, extreme unexpected events, namely black swan events. It can't predict what's going to happen accurately, and at least in that moment in time, it can't accurately predict what's going to happen when FTX collapses, right? Because that's an event that has nothing to do with factors that are external to the crypto market. When FTX collapses, the stock market doesn't give a shit that FTX collapsed, right? So we can't really capture what's going on there. In the instance of the event, a model like this won't be that great. What it will be great for is showing you, hey, total value locked is doing this, and the stock market's doing this. And why is the Chainlink price still sitting right here? Well, this will either say to you, yeah, that doesn't make sense. The price should be way up here, or the price should have fallen a lot more than it has. And so the way you can use this then is look at that information and expect the price to move back towards its expected fair market value based on all of these factors, okay? So, and I'll show you kind of how that works here. This line is showing you what the model believes the price of Chainlink should be. So you'll notice there are times when the model is saying, hey, Chainlink's probably a little bit too overvalued right now. So white is our price, white is our Chainlink price, and in pink, we have the expected price of the model. So if we just really zoom in here, we'll really zoom in. You'll notice, first of all, it's always fairly close to what the actual price is. And so that means Chainlink over the course of its history has moved fairly well in line with what we expect it to be. So there have been points where, we kind of get out of line, like right here. The model is predicting a price of $2.30, like at this point, but the price was $3.70. So, that's a fairly large differential there. So that's a point where, well, I'm expecting, hey, we've kind of gotten out of line here. The price of Chainlink is well overvalued from the expected price. And what happens? Yeah, we come crashing down, just like we would naturally expect, because you could think of these as speculative periods. Speculators have taken over, driving the demand for Chainlink. But what happens whenever speculation is the dominant driving factor in the price of an asset? It comes crashing back down. So you'll notice the price comes crashing down, and what happens? We get right in line with our expected value. So let's put back on the color code then. Let's come look here, and another great example of how this works. So in 2020, we have our price of Chainlink, and notice what the price of Chainlink was relative to the expected price. So remember, when we're saying expected price, we're talking about the expected price based on the model, what the model is telling us. And the model is looking at all of these different economic factors, these different cryptocurrency market factors. It's only looking at factors like the stock market, the total value locked in the DeFi market. It's looking at the number of active addresses. It's looking at these things. It has no idea what the price was before that. And it's making this assessment based on that factor. So you'll notice that all through 2020, we were undervalued. And that's why you saw the price of Chainlink continue to rise during that entire time, because all of these other factors were very beneficial to the price of Chainlink. And these are telling us that, hey, we're quite undervalued at the moment, in spite of the fact, so, we're only trading at $8, while the model believes we should be up at around $12. Okay, a 50% gap. That's when we see the Chainlink price, or the Link token price, go on this huge run. When we finally reach this point where we've kind of reached parity with the expected value of the model, and then you start to see the expected value of Chainlink turn over and start to fall. Perfectly in line with that, we see the price fall down. Critically, it remains undervalued, and the expected value of Chainlink starts to rise again. Now, let's take a look at this period here. You get this extended period starting at around $30. Once Chainlink hits around $30, the model says, hold on, let's look at the demand structure for Chainlink. This is everything I know that drives the demand for Chainlink. I know what the stock market is doing. I know what the total value locked is. I know what the active addresses for Chainlink are. And this $50, that's insane. That's insane because I have a lot of data showing me what the demand structure for Chainlink is. And this right here, this $30 to $50, I'm not buying it. So Chainlink, this model tells us $30 was the maximum expected price up until this point right here in April that we should have had for Chainlink. And so, you know, that goes against what we believe over here on YouTube land and Twitter, etc., where Chainlinks should be worth hundreds of billions of dollars. It should be the most valuable asset in the world. And those things may all be true, but those aren't based on the current economic circumstances. Those aren't based on the current circumstances surrounding the cryptocurrency market. Those are based only around our beliefs about the future. And guys, this is the crux of the issue here. This model doesn't give a shit about what the future is. It doesn't know about the future. It doesn't even know what the future is. It only lives at this point in time. It only lives in the present, okay? So it's analyzing what's happening right now, and it's giving us these observational outputs based on everything it knows. So it's saying to us, when total value locked, and you know, I just threw that in orange, when it gets up to $170 billion, yeah, that's positive for the price of Chainlink, but that's not giving us a $100 billion market cap. So when we're looking at this total value locked, the model is going to objectively look at it and say, hey, based on everything we know about all this data, this is what the price should be. Based on your opinion that the price should be, you know, $500 right now instead of 50, well, you're crazy, because I believe the model, that is, who is objective, who doesn't watch YouTube, who doesn't care what XYZ YouTuber says about, you know, Chainlink's price, who doesn't care about what they say about Ethereum, who doesn't care what Band Network's doing. This model only looks at the data and the demand structure as it really is, not as we want it to be. Hopium is real and Hopium has its place. But a model like this is for the realist, someone who wants to understand where the price should be based on the collection of market dynamics that are actually impacting the market at this point in time. So, you know, when we're thinking the price should be hundreds of dollars, the model's like, nope, the price should be around 30 bucks. So let's just go forward. So you'll see that we get into this extreme overvalued period right here. Okay. One of the most overvalued periods Chainlink ever had. And I think, guys, you know, if we're all being realistic here, that makes sense, right? This was, what did we say an overvalued period is? It's a period where the collection of speculative investors they are the ones running the market. They are the ones outweighing everyone else in the market. That's exactly what we had here. We had this period where speculation took over. That was the primary driving dynamic behind the price of Chainlink. And the model told us that. It said, whoa, this is way overpriced. You know, $41, $43, whatever. Nope, I think the price should be about 25. You know, $51, nope, I think the price should be around 27. Okay, and what happens? We go into this extended overvalue period and the price crashes. The price crashes. Where does it crash to? It comes back down to the equilibrium value. And in fact, this is why a model like this is great. It crashes below the expected value of Chainlink. And it's saying, hey, all right, guys, I thought that we were overvalued, but you're getting a little ridiculous now. This is a little bit extreme, because I think the price should be $19. I've looked at the total value locked. I've looked at the economic factors. I've looked at the health of the crypto market. And I think the price should be, you know, back here in July, I think the price should be $20. It's $13 right now. Are you insane? And so what we see is the price starts rising back up to meet the expected value of the model. All right. Now that carries on, and you'll notice we get into another speculative period. Where are we at now? We're at the end of 2021. So I think we all can agree that was another speculative period. And critically, the model thought $27 was the appropriate fair market value for Chainlink. The price got up to around 34. So not crazy, definitely not like this period back here. And I think we'd all agree Chainlink didn't do a whole lot right here, right? So we were in another speculative period. And conversely, in this period, we were in a pretty extreme undervalued period, right? So the price of Chainlink during this period was well below where the model thought it should be. You saw this point where we were, for the most part, overvalued. And what happened? We saw the price collapse right down with it. And when we got to an extreme point of being undervalued, so we got all the way down to 17, the model still thought, hey, we should probably be up at around 25 or so. That's where the price came to. Then, the Fed started raising interest rates, the stock market started collapsing, and you'll see that remember, don't just look at the red or green line. The degree to which we get extended off of the red or green line does matter. So when we're pretty close right here, this is basically saying, hey, we're essentially at the fair market value right now. So as we go from 24 all the way down to $12, the market was rather efficient at that time. So you'll notice that all through 2022, we pretty much sit right at around the fair market value, right? So we are right in line. Then what did I say? One thing you have to watch out for are black swan events. They can get out of line with kind of where the price is. So we had the FTX collapse, and the model was telling us, hey, we are well undervalued here. So we're down here at $6. I think we should be up at $12. It's a black swan event, and there's a lot of shakeup going on in the market at the time. And so the model can get out of line for a short amount of time during those periods of black swan events. And that's exactly what you saw. You saw this very brief period where it didn't really make sense to say that we're undervalued as the crypto market is kind of collapsing all around us. But then what happened shortly thereafter, we kind of got right back in line, right? And so we've kind of been in this slightly undervalued period, which I think most of us can agree the price of Chainlink right now is probably a little bit undervalued, but for the most part, been exactly in line with what the model is suggesting the price should be. When we're saying the difference between $7 and $9, kind of inconsequential, right? That's not a huge difference between what this model is predicting and what the actual price is. So when we see these times where, it's a dollar or two different from wherever the actual price is, that's not that significant. Now, that brings us to where we're at this exact moment in time. And you'll notice, yet again, we have this huge, massive, in fact, bigger than the FTX event. We have this massive difference between what the model believes the price of Chainlink should be and what the actual price of Chainlink is. And so what's the reason for this? Well, the reason is that we are in, right now, kind of a black swan event period where the SEC has just brought a suit against Coinbase. It has brought a suit against Binance, and it's suggesting that Solana, et cetera, these are all securities. So you could easily say that the DeFi market is kind of at a point right now, which is under fire. So, the model is saying, hey, Chainlink should be $13 right now. And by all rights, all things being equal, we probably would be somewhere around $10, $11 or so. But because there's a lot of fear in the market right now, and there's a lot of uncertainty surrounding the DeFi market, this price is not in line with what the model expects. So you're basically in this particular instance, and probably in this particular instance right here, you're seeing a period where the model isn't able to draw an accurate conclusion because of the fact that a black swan event is occurring and it's having a negative impact on the price of Chainlink. There aren't too many black swan events which are going to positively influence the price of Chainlink. Chainlink, perhaps more than a lot of other assets, is one which is going to love certainty. It's going to love seeing the total value locked continue to chug higher because who is demanding Chainlink? It's going to be these DeFi networks requiring data services. So all of these things kind of go together. When we are in this period where, a lot of the DeFi networks are coming under fire, or a lot of their primary chains are coming under fire. Thankfully Ethereum hasn't been named as a security yet, but we'll have to see what happens there. You're going to expect a period like right now. Once things cool down and once there's a little more clarity, I would expect, and this is what we'll continue to watch, I would expect these two values to come back in line with one another. Now notice each time that we get into one of these periods where Chainlink is significantly undervalued, we typically see the price go on some type of run right there. But, I feel like that's neither here nor there. If you're watching this video, you're probably in it for the long term on Link, and you don't really give a crap what short-term price run from $5 up to $8, other than whatever memes you get to make on Twitter. But, beyond that, you probably don't care about these little tiny $6 to $8 price runs that we've seen. So guys, that's the long and the short of it. This is a price analysis model which has been very powerful in identifying for us where the price of Chainlink is compared to where the model believes it should be. It'll be interesting to keep watching this. This is going to be available on polaritydigital.io. We're launching on Tuesday. If you get in on the launch, you'll be able to get in at that price and stay locked into that price for lifetime. If you wait until longer, the price is going to go up, but we're still going to keep it at a fair and reasonable price. So that's going to be it for this one, guys. Until next time, as usual, see you.